Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, today is the 20th of July, 2020. That's 320s. And, if you're numerologically bent, then that probably means something to you. I'd like you to explain it. What's your thoughts here? Are we heading for a double dip depression? Email us, kl@kerrylutz.com. In the meantime, dollarcollapse.com. John Rubino is with us for our beginning of the week chat here. And John, economy, well, cities are shutting back down whether they need to or not, right?
Hey, Kerry. Yeah, and you're seeing a lot of kind of headlines from big investment banks talking about how slow the year ahead economy is going to be and how we're going to, not recover after all. And that's especially scary coming from those guys because they're congenitally bullish. Most of the big investment banks need to get people to buy stocks. And so when they come out and they have their economists say, oh, we expect the economy to contract further than expected, and we just don't like what we're seeing and we can't predict anything. Stuff like that is scary for stock market investors. So you very seldom see it out of investment banks, but you're seeing it now, which means, what their economists are seeing is so scary that they feel compelled to talk about it. So, yeah, and they're right. If the economy drops back down from here, it starts contracting again, then where do we go? I mean, what's the way out from there? Because the whole V-shaped recovery is what everybody's pinning their hopes on. And if we have, a double W-shaped recovery where we come back a little bit and then we drop down to an even lower level, then we're back in the 1930s. That's what happened then when we recovered a bit from the 1929 stock market crash and the resulting recession. And it looked like we were okay. And then everything rolled over again. And then that's when the Great Depression really happened. So we're tracing out a pattern that looks kind of like that. And so the question will be, what do stocks do in that circumstance? Because either earnings tank, that would be the result of a slowing economy from here. You would have just these horrendous earnings reports out of all the big companies in the S&P 500, which in theory at least should affect stock prices. Or people will look ahead to even easier money. They'll just assume the government is going to start buying stocks and push interest rates to negative territory and do all that stuff, all the stuff we've been talking about finally happening. And then they'll buy stocks because of that. So there's no way to know what this means for financial markets. But what it means for the labor markets are pretty horrendous. In other words, if the economy doesn't grow from here and actually starts to shrink again, then all the people who are out of work are looking at more or less permanent unemployment, because already, what is it, half the restaurants that are listed on Yelp that have closed so far have closed permanently. They're never coming back.
Yeah.
And commercial real estate, how many malls are profitable right now? Arguably none of them. And how many people are paying their mortgage? It's something like what, one third of people with mortgages are not making their full payments.
Forbearance. Yeah, they're in forbearance, which was provided for. Forbearance was provided for in the CARES Act. And you can get up to a year's forbearance. You just have to show that you've been affected by COVID. If you're out of work, you're affected. And then that year's interest will be tacked on at the end somehow. Somehow it'll be accommodated, and they're not allowed to say that your mortgage is in default. But so far, I heard this was a couple of weeks ago, 180 million missed debt payments across the country. That's like a huge number, I mean, that is big.
Well, see, ordinarily that would be the death knell for most banks, right? If all of a sudden, you're running on 5 or 10% profit margins overall, if you're really lucky, and if 1/3 or 1/2 of your borrowers stop paying or scale back their payments to you, then you're running big losses, right? And the big Wall Street banks have been reporting lately, and some of them are bad, some of them are good, and the good ones are good because of trading profits. So,
Yes.
in effect, what the government is doing to boost the stock market is bailing out the big banks by letting them make money on their prop trading desks to offset all the bad paper that they have, all the loans that are non-performing right now. So they're putting away massive amounts of those profits into loan loss reserves. And in that way, they hope to smooth out the crisis in the next couple of quarters when maybe their trading profits aren't there anymore, but nobody's paying on their loans or anything. So these guys are going to build up reserves and then take the reserves down as a way of keeping their earnings from just crashing. But you know what? That's a temporary thing. You run through your reserves, and if things don't get better, then you're reporting massive losses. So that's the banking industry. and then if we have to go to negative interest rates in order to save the stock market, that's really bad for banks too, because a negative rate environment, as we found out in Japan and Europe, is terrible for the big banks. They can't make any money doing that. So that industry, at least, doesn't seem like there's any way out for them.
No, just continued Federal Reserve bailouts. But on the other hand, look what's happening with precious metals. Right now, we're a hair's breadth away from $20 silver. That isn't the technical resistance point, but it is humongous psychological resistance point. And in fact, think about it. The last time gold peaked, silver peaked right at 49.80, I think intraday. And right now, gold is at $1,800 to $15 or $19, depending which numbers you look at. Silver is still like just under $20 an ounce. So it's got a lot of upside kinetic energy behind that price. People have compared it in the past, to a jack in the box, where you keep turning the dial, and eventually the jack in the box springs out of the box and makes that noise, and it's really annoying if you're a parent. That's kind of what we're looking at for silver right now, right?
Yeah, silver's back to outperforming gold, but it's got such a long way to go.
Exactly.
It's still, 3 or 4 years ago, $20 silver would have seemed like a catastrophe because it was in the 30s and 40s. And so it's not even halfway to its all-time high, while gold, like you said, is just right there. A couple of good days and gold is pretty much at its all-time high in US dollars. Yeah.
10% is $2,000 gold, John.
Yeah. And it's funny, I've been for years, or for the last few years, telling my family, when gold hits 2000, I'm going to retire and we'll do all that, but implicit in that promise was $70 silver when gold hits 2000, because I assumed that that's what silver would do when gold hit 2000. And we're not there yet. There's a long way to go for silver, which is probably a really good thing if you haven't gotten into it yet, because there's no fundamental reason for a gold to silver ratio of whatever it is now, 98 or 95 or whatever. And there's no historical reason for it either. So we should expect, if something shouldn't be that way, normally
it won't stay that way.
It doesn't stay that way for very long. And so you could easily see the gold silver ratio go back to 50, which would mean pretty much doubling for silver, regardless of what gold is, or if gold just sits there. Gold doesn't have to go up for silver to double if the gold to silver ratio doubles or halves. So yeah, silver looks great right now, and the silver mining stocks look pretty spectacular, although they've already had good runs. Corrections happen all the time in bull markets. So with the mining stocks, Rick Rule just came out and predicted a correction. And when he does something like that, that's scary, because he's really good about the precious metals mining market, because he sees the funds flows into the juniors that bypass the stock market and go straight in via private placements and things like that. And so he sees how easy it is for those guys to borrow and to be funded. And that gives him a sense of what's going to happen in the near term. And if he thinks there's a correction coming, then you have to take that seriously. And with really thinly traded, very volatile stocks, a correction could mean, a 50% drop from here. So it's not a time to jump in with both feet in the mining stocks, especially the junior miners, just because they've had such a great run. But still, they're nowhere near their ultimate highs if this process plays out the way it has historically.
Like
Which,
our client Arcana, we work with Arcana, and they're a sponsor of the show. They've got a cost of production of $8 per ounce, and every dollar that goes up is millions of dollars in profit. And the pure silver plays are like that. And then you got the other problem with the base lead and zinc prices are down. So, and then we've had shutdowns across the globe of mining, of mines. So eventually that's going to find its way into supply. That's what Andy Schekman was talking about. Well, enough of that. So Robinhood strikes again, John. Can you believe it? The cost of education. They always say, well, look at the cost of college education, cost of financial education for those newbie traders, getting more expensive all the time, John.
yeah, there's a big commercial real estate company that's on the verge of bankruptcy, and apparently the day traders on Robinhood have been buying that stock pretty aggressively.
Makes sense.
Which
Makes sense to me, John. Bankruptcy, Robinhood, they kind of just go together.
Yeah, that has worked out for them in the past, but probably not this time. Probably they lose most of the money they put into it, which is like you said, that's tuition and experience university. So people are just learning the lessons that you and I learned way back in the day about how dangerous equities can be and how careful you have to be about where you put your money, especially in something that's been moving dramatically.
But 20,000 of them, John, though, 20,000 are going to get burned on this CBL bankruptcy. That's like that's like a small city. Small town.
Yeah, in terms of one stock, of the shareholder base of one stock, yeah, it's a lot of people to jump in towards the end and lose all their money. But there's a bigger story here, and one that really scares me, and I'm not sure exactly what the details of it are, and intend to look into it. But the advent of trading apps, which are basically free, have led a lot of the big brokerage houses to lower their commissions to zero. Charles Schwab just did that. So you can trade stocks on Charles Schwab for no commissions, which leads one to wonder how they make money now, right? How are these big brokerage houses making money without charging for stock trades when that used to be their bread and butter? And so if you've got a lot of money with a big brokerage house now, their business model has changed dramatically on you, maybe without you even paying attention. And they're not nearly as safe a bet as they used to be. It used to be, well, a year ago, Charles Schwab was going to be just fine no matter what, because they weren't an investment bank and they didn't take big chances with their own money or with clients' money. They just executed your trades, charged you for it, and made a lot of money in the process and didn't have to take on a lot of debt. They were this rock solid company. Now, how can they still do that? And as somebody with accounts at Schwab, and what else they're doing is they're consolidating the industry. I used to have accounts at Schwab and Options Express and TD Ameritrade. And then Schwab bought Options Express and folded those accounts into their platform. Now they just bought TD Ameritrade too. So this is a lot of stuff happening at the same time that really increases the risk profile of my money. It's all being consolidated into one company that no longer makes money from its
primary business.
Yeah. So
Yeah.
I don't know. I don't know all the details of this. I don't know what the answer is, but it's a really scary transition from the way we were to the way we are now.
Oh, for sure. For sure. But I guess we're going to get our education, and the country will get its education on that. Clearly now, I would say that Chuck Schwab falls into the too big to fail category. Can't let Charles Schwab go down, or tens of millions of their clients are going to go down with them, right? So they're too big to fail.
I mean, we don't know for a fact that Schwab is in any kind of financial trouble. I'm just saying
No.
it's worrying because their business model has changed. And, I don't want to learn that lesson. I was hoping I was done with Experience University, at least in the stock market, and to be stuck in a broker that goes bankrupt is one of those really big pieces of experience that cost you a fortune. So I don't know, and it's also kind of painful to be on the side of bailouts. In other words, to be hoping for a bailout for this company that I'm tied to, because that's the last thing a libertarian-ish person wants to be hoping for, is more government bailouts for big finance companies. But so anyhow, anybody who has a brokerage account that they haven't really paid a lot of attention to and aren't concerned about, maybe it's time to be concerned about it. That's the gist of this story, that it could be time to start paying attention to the stability of the people who have our money. Obviously, a bank is something you need to pay attention to too, because if you got a big bank account and your bank gets into trouble, which a lot of banks will in what's coming, it might not be a bailout this time. It might be a bail-in, where they take depositor money and use it to prop up the bank. So your bank account is no longer super safe anymore. So all roads lead back to gold and silver coins buried in your backyard right now. It's like the last thing that isn't super risky anymore.
Yeah, and Chuck Schwab is too big to fail. So what about this Epstein judge here in New Jersey? That was pretty shocking.
Well, the Epstein case just gets crazier and crazier. Yeah, there's a judge who's overseeing one of the Epstein cases, and somebody just, put out a hit on her family. Somebody came to the door and I think it was killed her son and shot her husband, and did it in a professional way, pretending to be
Gangland
delivering.
style.
So. And again, we know nothing about this other than that there's a connection, or that there looks like the possibility of a connection. But God, this thing just never ends. I hope, and Ghislaine Maxwell is still alive, which is interesting.
She's got a dead man switch for sure. Anything happens to her, and you and I will get emails with all the videos. Everyone in the planet will get it, and there'll be no hiding it. And anyway, we'll see what happens with that one. But the definition of COVID-19 now includes motorcycle accidents.
Yeah, that's can we laugh about a motorcycle accident? I don't know. Okay, but I'll just tell the story without even smiling. All right, I'm going to do it with a serious face. But somebody wrecked his motorcycle and died in Florida, and the state counted it as a COVID-19 death. And they had the guy who's responsible for the stats on TV. And he said something like, well, the guy could have had COVID-19, so that's a valid, it was one of those amazing responses that I'm sure the guy wishes he hadn't said while on national TV, and so that just brings into focus the unreliable stats that we're getting with this pandemic, because, they keep coming out and revising all the numbers based on changes in the way they calculate everything. And for a while there, it was, the death rate is way lower than we thought, because we have all these people who are, they have it, but they don't have any symptoms. So we don't even know that they have it, which means you can't calculate that number at all, but it's very possible that the death rate is way lower than we thought. Yeah. And,
of course it is.
Yeah, it seems like it. Yeah. And
just a couple of useful stats here. On July 19th, it appears 592 people died of COVID across the country out of 7,700 deaths that take place every day. In fact, they were worried that they were going to have to, the CDC was going to have to not call it an epidemic anymore, because once the number of deaths taking place for a certain period of time go under 6% of total deaths, it's no longer an epidemic. And God forbid then, what would we do if COVID wasn't an epidemic or a pandemic anymore? I don't know what we do, but you got an article here about the Georgia governor ordering cities not to mandate masks, which I wish they would do that in Florida here.
But see, this is an interesting political fight because the mayors of the major cities in that state are mandating masks. And the governor is coming out and saying, no, you can't do that. And he's trying to sue the mayors to stop them. So it's a question of, who has the power to make this decision now? And it's not clear. It's an interesting political fight, but it also illustrates the political hypocrisy. Once again, everywhere you look, there are people just making stuff up out of thin air and saying the opposite of what they said a week ago. But originally, long ago, when this thing first started, Trump came out and said that he was basically in charge of national policy when it comes to this stuff, and he'll just tell the governors what to do. And the mainstream press went insane over that because it appeared to be unconstitutional, and Trump backed off. And now you've got governors and mayors kind of making COVID policy across the country, and the mainstream media is complaining that we don't have a national policy.
Yeah,
that Trump isn't imposing his will on everybody else.
He's damned if he does and damned if he doesn't.
Yeah.
And look, it's a question in Georgia whether their emergency health power of the governor, the emergency power declaration of an emergency, preempts the local officials. And probably it does, just like in most states, municipalities are not allowed to pass their own gun control laws and requirements. It's strictly a matter of state law. It's a couple of minor exceptions, like New York, where they leave it to the counties to decide. But generally, state preempts, and my gut feel is it's going to be that way here. Hey, finally, what about that Bitcoin hack, the Twitter hack? Somebody got into the administrative panel, took control of Twitter, and a bunch of high-profile figures, blue-checked figures on Twitter. I mean, that was pretty hysterical.
That was. For people who aren't familiar with that, some hackers did social engineering, which is what they call tricking people into giving up their passwords. So they got into Twitter and they hijacked a bunch of famous accounts, including Obama. And I think Elon Musk was another one, where
and Biden,
they sent out messages saying, we're going to expand Bitcoin because we love Bitcoin. So you send us 1 Bitcoin and I'll send you back 2 Bitcoins. And people did that. People sent money in based on that pitch. And so that those Bitcoin disappeared, I think. I don't think they've actually caught the people
no way
who stole the money or anything yet, but they're looking for them and everything. But so the question then becomes, can you trust social media accounts, and is anything you see real anymore? And the answer is very possibly not. And the second question is, how does this rebound to Bitcoin? Does this affect the viability of cryptos at all? Or was Bitcoin just the vehicle for the hack? And I kind of think that's the case. They could have done the same thing with dollars or something like that, probably gotten away with something. But still, it's interesting, and it's very scary, because if they can do that to Joe Biden's account, they can do that to your and my account, Kerry. They can do that very easily and kind of ruin our lives.
Okay, well, it's also a big blow for Twitter, because they lost control of their platform for like 5 hours.
Yeah.
They couldn't do anything. I mean, can you imagine what was going on in the systems engineering department of Twitter? There must have been a lot of sweating, a lot of screaming, ranting and raving. Jack Dorsey probably had a meltdown and nearly a nervous breakdown. And this is an important platform for millions of people.
The people who gave up their passwords, they're the ones who are in trouble right now, because you got to admit it if it happened, I think. And so there will be some heads rolling probably, but for a while there, Twitter didn't know who to censor. They couldn't figure out who's
and they couldn't censor.
Yeah.
But one interesting thing about that, they never took control of Trump's Twitter account away from him. That I find amazing. Supposedly, they got access to the direct messages of these users as well. That's effectively the Twitter's email system. So you're a person on Twitter, I can send you a DM, a direct message, and then you can see what they've sent out. And I haven't heard of any leaks on that yet, but if that gets out, it's going to really be interesting. Well, it's been an interesting week here, John. I'm sure that this week will be even more interesting. Why don't you guys take a look at John's site, dollarcollapse.com, financialsurvivalnetwork.com. Sign up for our free newsletters and Twitter feeds and all that. John, we will catch up next week, and I'm sure we'll have a lot more interesting stories to tell.
All right, Kerry. See ya.